All right, just recorded like a 9-minute video, but it didn't record my mic. So I'm going to record this video. All right, Silvergate Capital Corporation. I'll make this as concise as I can. We have a double top. 1, 2, 3, 4, truncated 5, which is an not truncated, it's extended 5. Interesting point is we go all the way back to here. There's just a lot of information to give. I'm trying to make it all make sense. We have an Andrews pitchfork. That's what this is right here. The blue and the green, the red lines. Top, bottom, top. This is our 2020 correction. We also have a Fibonacci time zone from here to here. Usually the Fibonacci time zones that will mark corrections are the 5, the 8, Alexa off, are the 5, the 8, the 13, and the 21. Those will mark trend changes. So you can see actually how this Andrews pitchfork is pretty well respected on this time frame down here. Price goes up, rejects, comes back down, doesn't tap here like it should have. It goes up early. It's going to be important for later. Goes up, rejects, goes back down, adds now it's support, big volume up, rejects, doesn't grab liquidity here like it should have. It doesn't tap off this prior high. So there's a lot of liquidity to be grabbed in this fair value gap. And there's also liquidity underneath here because we didn't get a full tap back down for a double bottom. So that being said, the 5, the 8, and the 13 all mark trend changes. So let's see how that looks. Well, the 5 marked a trend change because then it went up. All right, the 8 marked a trend change back down. 13, literally can't make this up, marks to the day the top. Okay, so this is a pretty good Fibonacci time zone to go off of, probably pretty dang accurate. So, and the 21 marked a trend change. Okay, but it didn't go up. All right, let's check out why it didn't go up. There's a lot of liquidity above this point, right here, on this exact day. Price tries to go up to grab liquidity. It fails. And this price move up were market makers moving price up, price moves back down. Now, this is the Andrews pitchfork way back in 2020. So market makers are grabbing all liquidity. As soon as price goes down, market maker grabbing all liquidity. Price moves back up, market makers push it back down, grab as much liquidity as they can, push it back up. And then now they're going to, since they grabbed all the liquidity on the low side, they're going to try and grab liquidity on the high side. So they mark price back up, grab liquidity above this point, and they sell it back down. And then they use this trend line that people think is valid from these bottoms here, mark price back up. Price moves outside of the major parallel channel. And what do? When price hits parallel channel? Well, they drop price. So they let price move outside a parallel channel so that then they can drop price on retail. Interesting point that we're literally at today. Price is now testing parallel channel again. What happens when price tests parallel channel? Well, price collapses. Price is testing parallel channel for the first time. None of these tested parallel channel. And also, the Andrews pitchfork that I made from this top to that bottom to this top is the last line of support. And because this is the last line of support, either price is going to go up, break out of this parallel channel, and go higher, or price is going to fall. Well, price fell after hours. And why did price fall? Because price needed to grab liquidity underneath this point. Remember, price hunts for confluence, because at confluence, there's liquidity. And big bags need liquidity to fill positions. So they filled positions here, dropped it back down, maybe filled a couple positions here, sold, and now it's all manipulation. Market makers are selling this price down on no news. They just delayed. There's no bad news. It's just delayed news. And they're making that seem like it's bad news. Why? So they can grab new liquidity down here. Could this be the bottom and we just like buy back up to this Andrews pitchfork line, capture this liquidity and go back up? It's possible. But to me, it seems highly likely that we'll hit this large confluence area at 0.768. Why is this confluence important? Well, let's go look. Back to here. And this is way back in 2020 now. Price after hours grabbed the liquidity it needed here, grabbed the fair value gap it needed here, and is holding right here. Yeah. But what didn't price do back here? It didn't retest the bottom of the channel like it should have. So then all of these people have their stops underneath this point. What does that mean? That means that price is going to grab liquidity at this point. It is literally a liquidity grab. Could be the bottom here. Unlikely. Price is going to grab this liquidity and move higher. There's a ton of confluence right here for price to grab liquidity. And this marked the bottom, yes, but it marked the start of an accumulation phase. Price starts moving deck down, market makers move price back up, grab liquidity. So this is where market makers started their accumulation phase. An accumulation phase is where market makers accumulate over time. So they're accumulating. People thought this was the bottom, hits parallel channel. They need more liquidity. They need not just this liquidity, but they also need gorgeous 2020 liquidity right down here. And this is the exact price right there. So it could grab liquidity underneath here, but I don't think it will. Market makers moved price down to here, grabbed everything, and then had sideways trading. So they don't want to stop themselves out. They want to grab liquidity right here.